The process of making a plan to manage your money wisely is called budgeting. It entails keeping tabs on your earnings and outlays as well as allocating your money in a manner that supports your financial objectives. Making a budget is crucial because it may assist you in managing your spending, setting aside money for the future, and achieving your long-term financial goals. In this video, we will cover the basics of budgeting and provide practical tips on how to manage your money effectively. You may attain financial stability and take charge of your money by following these steps. Before starting, don't forget to like and subscribe to our channel for more future updates. Determine your income. Finding out what you make is the first step in making a budget. Any money you regularly get, such as your salary, wages, bonuses, tips, and investment income, is included in this. For the purpose of making wise spending selections, it is essential that you possess a precise grasp of your monthly income. It might be difficult to pinpoint your precise income if you work for yourself or have a changeable income. To acquire an approximate amount in this situation, you may use the last several months' average of your income. Since it will prevent you from overspending, it is usually preferable to underestimate rather than overestimate your income. List your expenses. Creating a list of all of your spending is the next step. Both fixed and variable costs are included in this. Fixed costs are those that don't change from month to month and include utilities, rent or a mortgage, auto payments, insurance, and automobile payments. Monthly costs that are subject to variation include food, entertainment, and apparel. Examine your credit card and bank statements from the last several months to be sure you haven't missed any payments. To get a clear picture of your spending patterns, it's also a good idea to record your costs as you incur them for a couple of months. Categorize your expenses. It is useful to categorize your costs when you have enumerated them all. You'll have a clearer picture of where your money is going and where you may need to make changes after reading this. The most popular categories are savings, entertainment, utilities, food, housing, and transportation. Within each main category, it might be beneficial to establish subcategories. For instance, you may have distinct sections under food, for grocery, coffee shops, and eating out. You may be able to see places where you could be overpaying with this degree of information. Calculate your net income. It's time to figure out your net income once you've listed your revenue and spending. This is your remaining money after your costs are subtracted from your revenue. A positive net income indicates that you have made more money than you have spent. Should your net income be negative, it indicates that you have exceeded your income, and you may need to modify your spending plan to prevent debt accumulation. Set goals. You may begin creating financial objectives as soon as you have a clear grasp of your earnings, outlays, and net income. These objectives may be debt repayment, housing down payment savings, emergency fund accumulation, or retirement investment. Establish quantifiable and precise objectives to keep yourself motivated and on course. Create a budget plan. It's time to make a budget plan now that you have a clear picture of your money and objectives. This plan will specify how your money will be allocated to your expenditures and financial objectives. When making your budget plan, you must be practical and make sure that it fits both your objectives and your income. Begin by dividing your income among your fixed costs, which include debt repayment, utilities, rent or mortgage, and other constant expenditures. Next, set aside some of your money for recurring costs like clothes, entertainment, and food. Lastly, set aside a certain percentage of your income for debt reduction, investments, and savings. Track your spending. Monitoring your expenses is essential when creating a budget since it shows you how closely you are adhering to your plan. This procedure entails keeping track of your spending and comparing it with your planned budget. In this manner, you may see potential areas of overspending and modify your strategy appropriately. You may manage your spending with a variety of tools and applications, or you can track it manually using a budgeting spreadsheet or by maintaining a spending diary. Whatever your approach, keeping a constant tab on your expenditures is a crucial part of handling your money wisely. Review and adjust. Budgeting is a continuous process that has to be reviewed and adjusted on a regular basis. You may need to adjust your budget plan if your income or spending change in order to keep it reasonable and in line with your objectives. It is advised that you check your budget plan at least once a month to determine if any changes are necessary. Tips for effective budgeting. Start with your needs. Prioritize your needs first when making a budget plan. This includes shelter, food, and debt repayment, before spending money on desires or non-essentials. Apply the 50-30-20 rule. This dictates that you should set aside 50% of your income for necessities, 30% for desires or extravagance, and 20% for debt reduction and savings. Be practical. When making your financial plan, it's critical to be practical. Setting unreasonable expectations or objectives might demotivate you and cause you to completely give up on your budget. Make space in your budget for unforeseen costs. It's important to account for unforeseen costs like auto repairs or medical expenditures. By doing this, you'll avoid incurring debt or needing to use up some of your funds. Automate savings. Take into consideration establishing monthly automated transfers from your checking to savings accounts. You won't have to worry about saving thanks to this. Search for places where you can make savings. Examine your spending on a regular basis to see where you can make savings. This might be discovering strategies to reduce your electricity costs or canceling subscription services you don't use. Look for methods to boost your income. If your out-of-pocket costs are regularly more than your income, consider starting a side business or obtaining a higher-paying employment as ways to boost your income. Conclusion. One of the most important skills you may have to take charge of your money and reach your financial objectives is budgeting. Understanding the fundamentals of budgeting and putting it into practice can help you manage your money wisely and make it work for you. First of all, making a budget enables you to monitor your expenses and pinpoint areas where you may reduce your spending. This may assist you in setting aside extra cash for future needs, such as emergencies, retirement, or a wish list item. Setting up a budget also enables you to prioritize your spending and modify your spending patterns as needed. It enables you to differentiate between your requirements and desires and, in light of your priorities, make wiser financial choices. Additionally, budgeting might assist you in reducing or eliminating debt. You may avoid overspending, which can result in debt, by monitoring your expenditure and establishing boundaries. This may lower your stress levels and bring you a feeling of financial stability. This is it for today's video. What do you think of our video? Comment below with your thoughts and let us know. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.